Today in the crypto world, what's happening isn't just a normal price movement. This is a signal that the next big move has already started, and most people are still asleep at the wheel. Imagine this: Bitcoin, after weeks of stagnation, suddenly breaks out with strength. It's trading above $95,000, reaching levels we haven't seen in months. Short positions totaling nearly $700 million were liquidated just in the last 24 hours. That's billions of dollars moving in an instant. Proof that the market's momentum is real, not just hype. Altcoins are following. Ethereum, XRP, and even Doge are seeing massive spikes, with the total crypto market capitalization surging significantly. Institutional money isn't just trickling in anymore, it's flooding in. Bitcoin ETFs are reporting record inflows, meaning that long-term investors and large funds are betting that this rally has legs. But here's the twist: while prices are soaring, US regulatory clarity is lagging behind. A major crypto bill, intended to provide clear rules for the industry, was delayed in the Senate after Coinbase publicly withdrew its support. The CEO cited concerns that the bill, in its current form, could hinder innovation rather than help it. This means regulatory uncertainty remains, a mixed signal for investors. On one hand, the market is booming. On the other, lawmakers haven't yet given the green light for stable, long-term adoption. Now, why is this rally happening? Several macro factors are at play. Recent inflation data came in softer than expected, and the markets are starting to price in lower interest rates for the near future. Risk assets like crypto respond very quickly to these shifts. Essentially, cheap money is back, and crypto is benefiting. So what does all this mean for investors? First, never underestimate market psychology. When short positions get liquidated, it triggers a chain reaction. Traders who were betting against the market are forced to buy back, pushing prices even higher. Second, institutional flows matter. ETFs and fund inflows can sustain rallies far longer than retail hype alone. Third, always be aware of regulatory risks. A delayed bill in the US may mean short-term volatility, but it doesn't erase long-term adoption trends. Let's break down some numbers. Bitcoin is hovering around $95,000 to $97,000. Ethereum is up nearly 6% in the last 24 hours. XRP surged more than 10%. And Doge is riding the momentum with gains of over 8%. The total market cap of crypto has crossed $3.3 trillion, a significant jump from just last week. These are not minor fluctuations. These are major signals that the market is re-entering a bullish phase. Now, here's the most important part. The combination of macro factors, institutional adoption, and short-term regulatory uncertainty creates what traders call a perfect setup. The market is volatile, yes, but volatility is opportunity. Those who understand the signals can potentially ride the wave before it becomes mainstream news. Think about the bigger picture. Bitcoin and crypto are no longer niche experiments. They are increasingly integrated into the US and global financial systems. Every bullish spike we see isn't just a price move. It is market validation that crypto is being recognized as a legitimate store of value and a tradable asset class. Yet, caution is key. Regulatory news can quickly reverse momentum. For instance, if the delayed US crypto bill gets reintroduced in a form that restricts certain trading activities or introduces heavy taxation, short-term corrections are possible. But the trend toward adoption remains unchanged. Globally, governments and institutions are moving toward crypto-friendly frameworks, even if the US is slower. Let's talk psychology for a second. This is why timing matters. When markets surge, fear of missing out, FOMO, kicks in. Traders who hesitate may find themselves buying at higher prices. Conversely, disciplined traders can spot moments to enter during temporary dips, capitalizing on short-term volatility. The 700 million short liquidation we saw is a classic example of how market mechanics can accelerate trends. Another factor fueling this rally is institutional sentiment. Analysts from leading investment firms are noting that Bitcoin's recent breakout aligns with signals that were seen during previous bull cycles. Rising ETF inflows, reduced selling pressure from whales, and macroeconomic conditions favoring risk-on assets. These are not guesses. These are data-driven insights from the market itself. Meanwhile, altcoins are not left behind. Ethereum is gaining strength as staking yields and network upgrades attract both retail and institutional attention. XRP's surge comes amidst speculation about renewed adoption for cross-border transactions. Even meme coins like Doge are benefiting from renewed investor interest, proving that speculative markets can ride alongside serious investment trends. So what's the takeaway? Today's crypto rally is not random. It's fueled by a combination of market psychology, macroeconomic factors, institutional adoption, and regulatory developments. Prices are rising, adoption is spreading globally, but regulatory clarity remains the only major unknown. For investors, the opportunity lies in understanding the signals rather than chasing hype. Bitcoin's breakout above $95,000 shows strength. Short liquidations accelerate momentum. ETFs validate institutional interest, and macro factors like softer inflation data create favorable conditions. At the same time, keeping an eye on U.S. regulations is critical. These are the factors that will determine whether today's rally is the start of a long-term bull market or just a temporary spike. In short, crypto is back in focus. The numbers are real, the moves are measurable, and the opportunities are here for those who act wisely. This isn't speculation, it's market dynamics in action. And if you understand the patterns, you might be able to position yourself ahead of the crowd. So watch Bitcoin, watch Ethereum, watch XRP, and keep an eye on institutional flows and regulatory developments. This rally could define the next phase of crypto adoption in the US and globally. And remember, in volatile markets like crypto, data and discipline are your best allies.